And now back to me, Dan Edwards here with Tucker Maxwell, who is with Guild Mortgage. Hey, Tucker, welcome back to the show.
Thank you, Dan. How are you?
How you been?
Good. We're hanging in there.
Hanging in there. Yeah, there definitely is a little less work for you guys to be doing these days. We've got some great topics, and it's right along the lines of me outlining the tremendous amount of savings that are in the market for the buyers right now. So, how do you see it?
I think you're spot on, Dan. I think people that are on the fence of whether or not to buy really got to get off the fence, because now is an awesome opportunity to buy, and like you mentioned, get concessions that we won't see once the market heats back up.
Yeah, the concessions are kind of the important part specifically. And tell me why concessions are important from a lending standpoint.
Yeah, so it's twofold. One, today we don't really have interest rates available without points. And so if you're looking for a par rate, meaning we're not charging you additional for the interest rate that you're selecting, those really just aren't available based on where the Fed is pricing things, and how that translates over to the MBS and then eventually to how we price mortgages. So closing costs right now are higher than they would be typically if we were in a less volatile market. So that means buyers have to come to the table with more funds out of pocket than they normally would. So these concessions, or the seller credits that we can get within the contracts, will really help pass some of that burden over to the seller side.
Right. And correct me if I'm wrong, but the buyers can use these concessions to temporarily reduce the interest rate, correct?
Correct. Yep. 1 year, 2 year, or a 3 year buy down.
A 1 year, 2 year, and 3 year buy down. And in short, how does that work?
Yeah. So what we're doing is we're essentially taking those seller credits and we're putting it into the escrow account, and then we're drawing from it each month to discount the buyer's payment. So if I lock today at a 7% interest rate with a 1 year buy down, for the first year, my payment is actually going to be based on a 6% rate, and we're going to use that seller credit to cover the difference. So the full payment is actually being paid, but only a portion is coming from the buyer, and then a portion is coming from that credit, and we draw from it on a month-to-month basis.
Yeah, I think it's important to indicate that. I mean, another way to put this, I don't know if, yeah, another way to put this is your seller is helping you with your mortgage payments.
Exactly. Yep.
Yeah. Because it's not your money, and it's money coming out of the proceeds from the seller. And, I believe Americans have a record amount of equity right now, which that ties into why this isn't the kind of crash that we saw in 2008, is because we've had such a tremendous run up since 2012. So that's what, 11 years, 12 years. I mean, it's 2012, 2020. Yeah, I guess 10 years. I can't do math, but I can sell real estate. So there's that.
You're
okay. So the Feds just raised the rates a half point. And I heard yesterday the rates kind of softened a little bit, but it's short-lived, as I understand. What are your predictions for interest rates in 2023?
Yeah, I don't think they're going to really go either direction too much. I think there's about an 80% chance that we see rates in the sixes, maybe the high fives. But there's also a 20% chance that rates could tick back up. It really is based on are these Fed increases really controlling inflation? And the inflation number that came out earlier this week at 6%, that's really the number to watch. If that number continues to fall, the Fed can be less aggressive with their increases, and we may see rates come down. But if inflation starts to tick back up, they may have to continue these increases. So I would say sixes are probably where we're going to be for the duration of 2023.
Yeah, and I think it's important for folks listening or watching this to know that I believe there are more levers than ever before for our whether it's our government or the industry to pull in order to kind of keep things in check. So, in the past, there was like you did one thing and that was all you could do. I think there's a lot more that they can do monetarily wise in order to ease things. But obviously, the inflation number is the number to watch. And my hope is that it continues to go down. Well, this is a weird question. I didn't put this in. Who put this in there? Why is Dan the best realtor for you?
I think it's because you're a professional, Dan. And I think that's one thing when we talk about real estate in 2023, you need to partner with somebody that is a true professional that's looking at the data, that information you just shared, and knows those numbers and understands, where concessions are available, where they're not, and why it's a good time to buy. And I think if people don't work with a professional, they could get misled, or they could be told, hey, let's wait. Let's not buy now. Let's wait until the economy or housing market crashes. And that's not sound advice. So I think, while Dan, you're also just an awesome guy, I think being a professional is really going to help lead to good real estate decisions in this market moving forward.
Awesome. Yeah. I think being a professional is super important. That's why I wore the sweater.
Yeah, exactly.
And
a professional who also likes to have a good time.
Also likes to have a good time. That's right. Well, listen, Tucker, we always appreciate you coming on the show and your wisdom. How do our watchers, listeners get a hold of you?
Yep, I'm available on all the major platforms, or you can call me directly at the number on the screen. Happy to help however I can.
Very good. All right. Thanks, Tucker, for joining us. After this short commercial break, we're going to be talking to the newest member of the Eastside Real Estate team, Sue Maiorato.